Hey, it's Jennifer Lawhon with your monthly market update here for May of 2022. Let's jump right in. So here's a question we're going to look at today. Why are we not headed for a housing bubble? Because I know we get a lot of talks about, oh, we're in a housing bubble, what's going to happen, everything's going to crash. But let's look at this using some data. So if you look at this graph, now we're starting way back here around World War II. And why are we starting way back here? Because this is when the housing began to boom. And it has been booming ever since. Look at this graph. You can see we've seen growth, except that year of the market crash, which was 2008. And remember, that was due to poor lending practices. People were buying homes that they actually could not afford. They were taking money out of their appreciation and using it for things other than maybe remodeling. And then you can see, though, we went right back up and we're continuing to climb in 2021. But we also want to look at the forbearance. How is that looking? Because again, if you look back here in 2020, there were quite a few monthly number of homes that were in active forbearance. But how are we doing now, 2 years later? Go back here, look at the green. We're doing great. In other words, it's gone down. We've had a decrease in the number of homes that are in forbearance. What about loans upon existing forbearance programs? Okay, well, here's what's gone on with these forbearances. 37% now have been paid in full. That's excellent. 44% were workouts or repayment plans. So you've got some modifications or loan deferrals. And then 18.4% are still in trouble, but no loss mitigation plan yet. So still, these are really good numbers when we compare to several years ago. Danielle Hale says that we have learned from history that prices can fall. The more important question is if it's going to happen right now, and that's hard to say. So let's look again at more foreclosure activity. Right now, it's at an all-time low. If we're going back from 2005, now obviously you can see during that housing crash, right? We had a lot of homes in foreclosure. But now let's go over to 2022, 78,000. That's an amazing number compared to being up to almost 3 million when we're in the red. Lending standards are also tighter since that crash. So since everything happened back in those 2000s, right, late 2000s, lending standards have gotten tighter. Now, what does that mean? That means people who are buying homes right now qualify for those homes, meaning they can afford those homes. And that also keeps us from going into a crash. So look, if you look at the blue, we've been doing very well as far as lending standards. So what's ahead? Well, the estimated home price performance, we're looking from January to January, okay, as forecasted in Q1 of 2022. Right now for 2022, estimated at 9%. Okay, that's for this year, but then again, it's looking at slowing down for appreciation, so forth, through the next few years. No big crash, just slowing down, that's all. What about cumulative housing appreciation by 2026? Okay, well, we've got the optimists, they say 46.5%. You've got the pessimists saying 10.3%. And then all panelists, if we put them together, it came to 26.8%. Even if you're looking at the pessimists, they're still saying a positive 10.3% for appreciation over the next 4 years. So in other words, no matter whether you're an optimist or a pessimist, we're not looking at any sort of depreciation. Here's your home price forecast for this year by all of the different main companies. And you've got quite a few different predictions. And if you average all of these, we get to about 9%. So still a good amount that they're forecasting for this year. Hopefully next year, maybe we'll see a bit of a slowdown for appreciation, but again, no signs of depreciation. Bill McBride, we've used him very many times. Based on the current estimate for the peak Fed funds rate, 3.25% to 4%, the 30-year fixed mortgage will likely peak at between 5% and 5.7%. There is some variability in the relationship, so we might see rates as high as the low 6% range. This all depends on inflation and the Fed funds rate, but I don't expect rates to move much higher than the current rate, although 6% is possible. So looking at possible higher rates than initially projected. Let's look at affordability. Bloomberg says, new data from the Harris poll show 84% of Americans plan to cut back spending as a result of price spikes. More than 70% of respondents said they're feeling the effects of inflation the most in gas prices and groceries. Well, let's look at what happens when our mortgage rate goes up, the change in the mortgage payment. So this is on basis of a $300,000 house. We're just looking at principal and interest only. We're not worrying about the taxes and all that. Just your basic payment on the loan. Well, if you look here, this is the first one I want to talk about. January of 2021, the average mortgage rate was 2.73%. So your monthly payment would have been around $1,200, just a little over. Now, what happens if our rates go up this October to 5.5%? Now, I'm not saying they're going to, just some are projecting it. So we got to just look always at the worst case scenario so we know what to expect and to prepare for that. So October 2022, let's say it does go up to 5.5%. Now your mortgage rate just went up almost $500, so $1,700. So quite a difference when your mortgage rate goes up that dramatically. However, you might think, oh my goodness, how can I afford a house? But here's the thing. Let's look at the affordability approach, right? We're going to look at historic levels. We're going back all the way from 1990, all the way over here to today, which is over here. And what we mean by affordability is, can people afford homes? What is the affordability right now? Now we're looking, this takes into account not only housing prices, mortgage rates, but also wages, the current wages today. Now, if you look at these years, these were the years, right, during that housing crash where the distressed properties kind of dominated the market. But now we're still in a good affordability range. So in other words, we're still doing well with housing affordability. So let's look at another quote. The average consumer is spending an additional $429 monthly for items other than shelter. Meanwhile, average weekly wages just rose $212 per month. So the consumer is short by $217 per month. This means that the average consumer will be looking for a home that is $41,793 cheaper. Well, now you have to ask, do I have a relevant market opinion based upon facts? Well, let's start with home sales. Average days on the market, not much has changed. I'm telling you, in the last several months, I have not had any new great things to change with this one. 17 days is the average days on the market. Well, unless you're in Wyoming. So that one's a little. Existing home sales, year over year. So right now we are in the negative. We've known this, but this kind of breaks it down by region. So you can kind of see what areas are less with existing home sales, more in the negative. In that case, right now we're talking about the Northeast. South is negative 3%, so not as bad. I know we've seen an uptick in sometimes with the sales. But let's look at existing home sales here in terms of the graph. So you've got 2020, 2021, and 2022. We're just up here. The only data we have right now nationally goes up to March. So looking here, you can see that we had less sales this March than we did last March. And you're going to kind of see that when we look at April for the Orlando sales, when we get more specific. What about new home sales? Even with the new home sales, if you look at 2022, they still had less, at least for March, than they did from last March, but they're still doing very well with the new homes. And especially here, I would say in the Orlando and the surrounding Central Florida area. What about new home sales? Just in case you're curious what the price range is as far as new home sales go, you can see the bulk of it, which is 30%, is from the $3 to $399. Okay, $300,000 to $399, and then the next would be $500,000 to $749,000. So those would be the majority where your price range is. But now let's look at the percentage of distressed property sales, because we were talking about that. We were saying that it's actually not doing that bad. This is January 2012. This is January 2020 at 4%. And now let's go to January 2022. Not much. Okay, distressed sales, very, very minuscule, especially when we're looking at how it was a few years ago, like a decade ago. Now let's talk about home prices. Sale price of existing homes. Now, in the US, year over year, it's been about 15% that we're looking at. You can see the South, and oh my goodness, I know I've talked about this with Orlando. We've even seen more of a jump in April. When you see the data, I'm going to show you. Less home sales, but more bigger price appreciation. There we go. And then if we look at the change in home prices, year over year, you can see here in July and in February of this year, that's where we've seen a peak over the last year, those 2 months so far. And again, year over year change, this is just for March. The current has been 20.9% over the last year. Forecast is 5.9%. So again, they're forecasting that eventually it will slow down, but again, deceleration, not depreciation. Housing inventory, how are we doing? Okay, I wanted to put the two maps on because you know when I see changes, I like to show you the difference. This is what I showed you last month. This was the seller traffic index. A lot of states in the very week to week. Now look what's changed in just the last month. Oh my goodness, look at this map, right? So many more states have bumped up from very week to week. That's a good sign. So I wanted to show you that so you can kind of see the difference here. Oops, wrong one. So that was February. This was March. Okay, now let's go here. Months of inventory of home sales. You can kind of see we've had, oh, this is 2.6. So July and August is where we kind of had the peak as far as the inventory goes. You can see December to February, we kind of dropped off a little bit, but then we started seeing some more growth in March. What about the new home monthly inventory? Of course, they're doing better, but we've talked about that. New home construction as well. If you're down here in the South, and especially near Orlando, it's everywhere. New home construction is everywhere. So they're doing well. Now let's talk about buyer demand. All right, 121 markets nationwide saw double-digit home showings per listing. So we've been talking about home showings. And you can see in the Midwest, they're actually doing better. South, no change. Michael Lane says that we are sensing a slight slowdown in the western region of the U.S. in year-over-year showing index values. Although there is still very strong activity, the demand per listing is still at historically unprecedented levels. But for the first time in the last 12 months, it is neutral. So you can kind of see that with our South. Now, I'm going to do it again with the buyer traffic index. I just want you to kind of see the difference. This was the buyer traffic index in February. So most states were in the strong, most states. Now where are we at? Okay, now we've got more states moving up to very strong. So you can kind of see the difference. This is February. This is March. All right, so you can see the change. So we're starting to see some more movement on both sides. But of course, we got to talk about mortgage rates. Mortgage rate projections. Now, you know I gave you the bad news earlier that we're looking at possible higher price hikes with the rates. So 4.8% up to almost 5%. That's the average. You've got some that are saying 5 to 5.4. Mortgage rates over the last 30 years, you can kind of see where we hit that low back in 2021. They went up a little bit. You could see that this year. If you've been watching the mortgage rates, they've been going up. This is where they're projecting to be going. Here's your mortgage rate starting from 2016. You can kind of see the growth, the decline, and then the projection is in the orange. So you've got the actual, but look at how much it's been going back up. So we had that nice drop, but of course things go back up. Now we end with our market update. Here's our Orlando sales. So in the green, of course, is this year. Now, if you've noticed, in January and February, we actually had more growth, right, than we did in January and February of last year. However, March and April of this year have seen less sales than we did in the previous years. However, look at the prices, though. The average sale price, even though we've had less sales over the last 2 months, the average sale price keeps going up. Look at March to April. That's quite a jump. That's the average sale price, just under $450,000. So we are still seeing appreciation here, even with less sales. All right, we've got our summer buyer and seller guides available, PDF documents that are absolutely free. Just contact us if you'd like to have one. And if you have any questions, feel free to call us or visit our website at lawhonhometeam.com. And I look forward to seeing you guys next month.